Heads back into lockdown. And tense talks, the first face-to-face meeting between the US and China since Biden took office, gets off to a rough start. Chinese shares sink. Good morning, everybody. Welcome back to the second hour of the European Market Open, where we bring you the open of those European equity markets. And we are 20 or so seconds away from the start of equity trading. And this is the picture on futures. Futures suggesting we'll see some downside. Yesterday, we saw banks benefiting from that pivot away from tech stocks globally into the more value-driven side of markets. Today looks a little bit different then, with those futures pointing to the downside. But US futures do suggest we'll see a little bit of recovery in things that sold off heavily yesterday. So maybe we're just bouncing back after yesterday's substantial moves. NASDAQ futures up by 0.7%. We've got some volatility coming through in the commodity markets, certainly after big drops in oil prices yesterday. To what extent is that going to be something that plays heavily in the London market? The FTSE 100 down, I can see, by 0.9%. The Spanish IBEX opening down around a similar margin. The CAC 40 down by around 0.6%. So we'll get fairly quickly to a sector breakdown of what's going on and what is leading us around on this European equity market session. And in fact, I can tell you only utilities in positive territory, energy the biggest losing sector, basic resources not far behind, and banks after yesterday's bounce, banks also selling off today. So we're down by more than 1% on all of those three sectors and technology. So European equity markets opening to the downside. That's as the Fed's tolerant stance on inflation unnerved investors.
Inflation. We've said we'd like to see inflation run moderately above 2% for some time.
I don't expect the Fed to confront an inflation crisis.
They're telling people in the markets that they're going to be late rather than arrive sort of on time. And so inflation expectations could react to that in a way that the Fed doesn't anticipate.
Inflation, currently below 2%.
There's more and more of a consensus building. This rate increase is coming faster than the chair is advertising.
And now it's not going to be below 2% in the next few months. I see a 3 to 4% number ahead of us.
We're just into the question of some kind of mind reading. Do we think that the Fed is going to be afraid to do what's necessary should this turn out to be a really huge boom?
Plenty of voices weighing in there on the inflation conversation. Let's get to another now. Janet Mui, Bruin Dolphin Investment Director, joins us now. Janet, really interesting moves in markets then yesterday. Substantial sell-off in tech stocks continues, the spike in yields, unnerving investors in risk assets, or was it just a case of unnerving investors in tech stocks? Can we limit the tech fallout to just tech and not see it infect broader risk assets? What are your thoughts?
Yeah, I think at some point it could spill over to the other areas of the market, in particular the U.S., given that, as we all know, the major U.S. index, the S&P 500, has a huge load of tech stocks in there. So I think it is inevitable that some of these indexes will get impacted as well. And of course, the higher bond yields, if it continues at this kind of pace, it will also hurt emerging market assets, for example. And I think the legacy impact spillover could be inevitable.
Okay, so you do favour value and cyclicals, do you? What does that mean in relation to your tech exposure that you previously thought highly of, Janet? How much are you pivoting away from tech and into other places?
Yes, we did indeed trimmed our exposure to U.S. equity, which is very heavy on tech, given that we had a great year last year, and we feel that with the rising bond yields and with the economic reopening, that would favor tech less. So as a result, we have upped our cyclical value exposure at the expense of tech stocks. But overall speaking, we are taking a bit of a balanced approach. It's not like we are making huge changes to these positions, because we do know that market sentiment can flip quite easily at some point. And we feel that having a balanced approach is a good way for long-term investors.
Where do you see the inflation story going then, Janet? I mean, I've read some interesting suggestions from some analysts that we're seeing a lot of searches, Google searches for inflation. We've got our own data suggests increased interest in looking, in the general public and their expectation of inflation on the rise. We just heard a series of comments from some of our guests on the subject of inflation. How far is this inflation narrative driving us, Janet? And what I mean is this just going to be a temporary summer phenomenon, or is this something that is more here to stay?
Yes, indeed. You can't imagine how many times inflation comes up as a topic in our clients' discussion. So I think in the near term, it is definitely a huge topic, because as we all know, a number of factors is going to drive inflation much higher in the next couple of months. So I think it will reach feverish point at some point in the summer, when we have the higher inflation due to commodity prices, and then the reopening, and then lots of stimulus coming through in the US, and also supply bottleneck in a number of areas. I think that the inflation is likely to persist into the end of the year, but we do believe that it will kind of moderate at some point in the next year or so. Because we do think that supply will start to adjust eventually, and that the level of stimulus will start to moderate from next year onwards. But we do believe that the risk of inflation is tilted to the higher side.
Let me just shift tack slightly, Janet, because we're just getting some red headlines across the Bloomberg around what's going on at the BOJ. So the BOJ saying it's going to give its JGB purchase amount, so the purchase amount for Japanese government bonds, instead of a range from April. So that's just one part of what we've heard from the BOJ today. We've also heard a lot about whether they are or are not, and it's their view that they are not changing the bands when it comes to where they allow JGBs to operate, the yields at which they allow them to operate. But we've also heard, Janet, and this is where I come to you, about what they plan to do on ETFs, and that is weighing to some extent on Japanese stocks, Japanese equities. I know that you've been adding to Japan. Is this a surprise to you, what you hear from the BOJ, or does your strategy not depend too much on their involvement?
Yeah, we are not particularly concerned about that, because it is quite obvious that the Bank of Japan is likely to keep policy very, very dovish. It has yield curve control, so it can really control where the longer-term yields are. Our decision is based upon the fact that we are going to see a very strong global economy, very strong synchronized growth. And from our analysis, that backdrop is very supportive of the very cyclical exposed economies. And Japan is actually ranked one of the highest in our analysis. And we do believe that with a rising U.S. yields environment, actually Japanese yen is likely to weaken in that environment, and that should, again, support the very exports-oriented Japanese stock market. So it is more based on our view of the economic reopening and our view of the U.S. dollar and yen.
Okay, Janet, thanks very much. Stay with us. Janet Murray, Bruin Dolphin Investment Director, with us here this morning on the European Market Open. Coming up this Friday morning, the first high-level meeting between the US and China under the Biden administration. It descended into bickering. More on the Alaska meeting next. This is Bloomberg.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse. Many of those containers pass through here. Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP. But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Welcome back to the European Market Open. 10 minutes into European Friday trading, and you can see that we are down by around 0.5% on the Stoxx 600 right now. The range is down by between 0.5% and 4%. Let's get to some of the stocks that are on the move, some of the big themes we're dealing with this morning. Danny Berger has a rundown. Danny.
And well, it's a pretty ugly day looking at internals. Most stocks are moving to the downside, and chip makers are one of them. At the very start of the open, so 10 minutes ago, Infineon was down pretty sharply. It's paired some of those losses, but still down more than 0.5%, warning about the chip shortage that's certainly impacting a lot of chip makers today. The energy space, though, that's down the most today out of all the sectors, down nearly 2%. They're catching up to that U.S. session where we saw oil tumble pretty significantly. Also, some of the companies involved in the Nord Stream 2 pipeline taking a hit today after the U.S. mulling sanctions to prevent the building of that pipeline. Finally, one of the biggest movers to the downside in the Stoxx 600 is Telecom Italia, with Italy revisiting and looking at that plan for a single network that would have been dominated by Telecom Italia, really reversing decades of deregulation. Finally, looking at the bigger picture, the macro picture, that rise in yields easing off a bit so far. But I think it is interesting that even though we do have the dollar moving lower, finally, it's not giving too much of a relief to oil. WTI is more or less unchanged. Brent still lower by 0.2%. A lot of analysts say that the pain in oil will be short-lived given what OPEC Plus is doing, but still short-lived, not quite yet, Anna, not seeing any relief there today.
Okay, Danny, thanks very much. Danny Berger with a rundown on what's happening on these markets. We certainly are seeing quite a lot of volatility on the oil price after those big drops of yesterday. We're down only 0.25% on Brent right now, but we were down by more than that just half an hour ago or so. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. Sources tell Bloomberg that Greensill Capital owes SoftBank around $1.2 billion. The Japanese conglomerate is emerging as the main creditor to the collapsed supply chain finance firm. Greensill filed for insolvency in the UK amid concerns over the valuation of its assets. It could be one of the insurance industry's biggest deals in years. Chubb is proposing a takeover of Hartford Financial Services for over $23 billion. It says the deal would be strategically and financially compelling for both sides. Hartford says it's reviewing the proposal. In a sign things are returning to normal, some US Apple stores are letting customers try on AirPods before buying them. It stopped the practice when the pandemic began last year. It still won't happen in the stores that are operating with bank teller windows. It's already been possible in Asia for months. That's the Bloomberg Business Flash. Anna.
Thanks very much. Laura Wright here in London with your Business Flash. Now, the first high-level meeting between the US and China under the Biden administration descended into bickering. Each side criticised the other over human rights, trade and international alliances at the meeting in Alaska. Janet Mui, Bruin Dolphin Investment Director, is still with us. So it seems that there was still tension in this relationship. I think everybody expected there to be some, and for the pivot away from the Trump era to not be entirely smooth and not necessarily be very clear at this point. How cautious are you on Chinese equities at this point, Janet? And is it because of geopolitics or tech overvaluation, bubbles? What is it that makes you cautious?
Yes, we are starting to be a bit cautious on Chinese equities, given that, well, first of all, it had a very strong run last year, one of the top markets globally. And secondly, we know that the Chinese stock market has lots of those tech stocks, especially tech giants, which are increasingly subject to a regulatory scrutiny. And also the liquidity conditions in China are likely to be scaled back this year because they had a very strong liquidity stimulus last year, and they are pretty clear that they want to maintain policy at a slightly hawkish level. And of course, I think the recent talks between US and China, it does suggest that the tension is still there. And it's just a reminder that the geopolitical tension remains quite tough between US and China.
I'm just looking at a chart that shows that when it comes to doing business in China, when it comes to global stocks doing business in China, those with exposure to China have not done well through March. And I wonder why that would be. Why do you think it is that global businesses that do businesses with China have not been doing very well in March? Is it just that other opportunities have presented themselves and investors have taken money away from the China exposure and put it back into domestic recovery?
Yeah, I mean, this is a 1 month phenomenon, so it's still too early to see. I suspect it could be some kind of profit taking, as you can see that the performance has been phenomenally well, and I guess it's some sort of cautious approach by investors.
So yeah, that could be part of it. What about the tech giants, Janet, and interference in their business models or the way they're run, regulatory changes by the Chinese government? Are you mindful of that when you invest in China?
Yeah, I mean, regulatory concerns is always on top of investors' mind because of how uncertain it is. We often know about it in hindsight, and it can often come about as a surprise. Looking at, for example, the example of Ant Financial. So it is indeed an uncertainty, and we have to be cautious about it. And there are indeed signs that China is tightening its grip on these tech giants. So that's why we are closely watching the development. But equally, we don't think it will be a very, negative or disastrous scenario, because we ultimately believe that the Chinese authorities, they are still supportive of their domestic tech champions, especially, during this tough US-China geopolitical tension where they both want to support their national champions.
Janet, how do you invest in emerging markets outside of the Asia story then? How are you best getting exposure to emerging markets at this point? We've seen a number of emerging market central banks in a very different place when it comes to the tightening cycle. So I'm thinking of Brazil and Turkey, and then my colleague Mark was mentioning the possibility of Russia moving in the same direction, so hiking rates. What is the best way to get exposure to those emerging markets at this point?
Yes, we do think that in a backdrop of global synchronized growth and stronger economic reopening, we do believe that emerging market is a good exposure to that cyclical story. We prefer the exposure to emerging markets in Asia because we think that that is more of a trade story, and I think the control of COVID there is better. And we have thought about the exposure in, say, the EMX Asia, primarily the LATAM region like Brazil, but we are still cautious at this point because the grip on COVID is not good there, and of course the higher U.S. bond yields could be detrimental to these LATAM economies with quite high sovereign debt, and of course there is the risk of higher rate hikes, which could dampen the economic recovery there. So we prefer primarily the exposure of emerging market in Asia.
Okay, Janet, thanks very much. Janet Mui, Bruin Dolphin Investment Director, thanks for joining us. Coming up on the programme, Goldman bankers beg to work only 80 hours a week. Junior ones, certainly. Analysts complain about declining physical and mental health. Up next, we speak to Bloomberg's Tracy Alloway, who's been following this story. More on that next. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
The German government is suspending coronavirus vaccinations with the AstraZeneca vaccine as a precautionary measure. The decision, which was taken in accordance with our European policy, is to suspend vaccinations with AstraZeneca as a precaution.
There are very, very few cases that are outside the normal, but they are very significant. We hope that the EMA can, in the shortest time, clear any doubt and allow us to start up again.
This is a safe and effective vaccine. Its benefits in protecting people from COVID-19 with the associated risks of death and hospitalization outweigh the possible risks.
Tomorrow morning, the French High Health Authority will update its recommendation regarding the AstraZeneca vaccine so that we can immediately resume as soon as tomorrow afternoon the vaccination campaign.
Our aim, and that's the common aim of the national government in all 16 federal states, that already from tomorrow, over the course of the day, vaccinations with AstraZeneca can start again in Germany.
So the Oxford jab is safe and the Pfizer jab is safe. The thing that isn't safe is catching COVID.
A look back there at some of the twists and turns this week in Europe's view on the AstraZeneca vaccine, but of course getting the support of the European Medicines Agency, the EMA, in that press conference yesterday. Now, we are 22 minutes into our European trading session, and we see European equity markets moving to the downside, despite some moves higher in US equities. NASDAQ futures point up by 0.8%, but that was after a lot of selling yesterday, down by more than 3% in session yesterday. Europe didn't participate wholly in all of that selling, and so we see a bit of that here in Europe, but of course we have less tech exposure. Let's get to another story which is being read a lot on the Bloomberg terminal. Goldman bankers are begging for a better work-life balance. A group of analysts are asking their bosses for an 80-hour work week instead of the usual 100 hours. They say the long days are detrimental to their physical and mental health. Joining us now is Bloomberg's executive editor, Tracy Alloway. Tracy, I know you've been following this story closely. Who are these analysts then who've been making these calls and putting together a very slick presentation to make their point, and what are their complaints?
Yeah, so these are effectively the bank's junior bankers. It's generation of future investment bankers, if you will. They're recruited every year, often directly out of college, and they typically spend a couple years working very intensely to learn the basics of the trade. Basically, they're at the beck and call of all their superiors. And ironically, a big part of what they learn to do is making these types of slide decks for client pitches. So I guess when the time came to complain about their working hours, they kind of reflexively decided to make a slide deck. The presentation actually comes complete with charts and the Goldman logo and a little disclaimer, but I have to say the complaints they outline are pretty dark. They say that on average they're working over 95 hours a week and sleeping just 5 hours a night. Some of the quotes from anonymous analysts in there are also pretty forceful. There's one there who says that their body physically hurts all the time, and another one who says that at one point they couldn't eat or shower regularly because they were simply working around the clock.
Yeah, I mean, anybody who's worked in banking remembers nights where you didn't sleep very much, but that wasn't necessarily all the time, and it wasn't the norm for everybody. So what is the bank saying in response?
Yeah, so I guess the lesson here is if you want to get through to Goldman management, a PowerPoint presentation definitely helps, but also publicizing this on social media probably doesn't hurt either. So the complaints have been serious enough to provoke a response from Goldman Sachs. They say that they are paying attention to this issue and that they are also going to potentially forego some business in order to make workloads more manageable for their junior analysts. The analysts themselves, by the way, have their own ideas on how to fix it. They included a suggestion for a maximum work schedule of 80 hours a week, which, you know, is still double the standard work week for most jobs. They also said that the Friday night 9 p.m. policy should be respected. This is a policy that Goldman actually implemented the last time working conditions for interns and junior analysts came up in the public press.
A really interesting story. Thanks very much for bringing it to us, Tracy. Interesting to see how, as we come out of the COVID-19 pandemic, what changes and what does not change when it comes to culture and banking and other places of work as well. Really interesting story to follow. Thanks very much to Bloomberg's executive editor, Tracy Alloway. Quick check on markets. European equity markets, as we've been saying, falling, but US futures do point to the upside. NASDAQ futures up by 0.8%, but of course put that in the context of the substantial losses we saw yesterday, down by more than 3%. In yesterday's Treasury yield spike-induced sell-off in tech and growth stocks. Coming up on the program, back to the politics. Major EU nations, including Germany and France, are resuming use of the AstraZeneca COVID-19 shot, but the bloc's vaccination drive still lags behind many other locations, or certainly behind the UK and the US. We'll get more on that story next. We'll talk European politics around it. This is Bloomberg.
just COVID, but it's COVID related, but it's also stress related to job. I think COVID probably just sort of was the nail in the coffin for a lot of us. Having the destruction room here is also a very healthy outlet. I do not encourage it as something that we do on a regular basis, but I do find that when people come in, being able to break plates, being able to write out whatever's on their mind and letting it go, being able to just take out their frustration and their anger.
Come to a place like this and be able to break some stuff and release some tension without going to jail.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European Market Open. Half an hour into Friday's session here for European stocks. And we're moving to the downside after some modest gains yesterday here in Europe, despite the heavy selling stateside. So a little bit of a disconnect, really, between both sides of the Atlantic right now. Let's have a look at the sector picture and see where we are. We've got a few sectors in positive territory, not many. Utilities and others that are a little bond market proxy-like, if you like. And those ones are on the rise. To the downside, we see that energy was one of the biggest falling sectors and still is actually down by just over 1%. Autos and parts down by 1.2%. So some selling of the rebound-related stocks that have done very well of late. So commodity stocks had done pretty well on the back of higher oil prices, of course. Autos and auto parts have been doing very well this week. We've seen a change in leadership on the DAX as a result, with VW taking that spot from SAP. Let's get a Bloomberg First Word News update. Some of the top stories we're covering this morning. Here's Laura Wright.
Thanks, Anna. The first high-level talks between China and the Biden administration got off to a rocky start in Alaska. Each side sharply criticized the other on human rights and trade. Beijing had touted a possible summit between Presidents Biden and Xi if the talks went well. It's unclear if this meeting derails that. The US is weighing additional sanctions to block construction of the nearly completed Nord Stream 2 pipeline. Sources tell Bloomberg it may issue penalties for the parent company and single out an insurer working with vessels on the project. Congress is calling on the White House to take stronger action on the pipeline that will take gas from Russia to Germany. The US National Football League has announced a new series of long-term TV deals valued at about $105 billion. It includes a historic contract giving Amazon exclusive rights to Thursday's broadcast, a first for a streaming company. Bloomberg sources tell us some networks will end up paying roughly double their current fees. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you. Laura Wright here in London. Now, major EU countries, including Germany and France, are restarting use of the AstraZeneca COVID-19 vaccine after the European Medicines Agency, the EMA, again endorsed its safety. It's good news for the bloc, whose vaccination drive is lagging far behind that of the UK and the US. Let's talk to Maria de Mertzis, Bruegel's Deputy Director and former researcher at the Dutch Central Bank. Maria, really good to have you with us. I want to come to the Dutch election and the Dutch politics story in just a moment, because that's been of interest this week as well. But if I could start with the sort of pan-European politics, we've seen some tensions within the EU around the vaccine scheme. I'm thinking of nations not necessarily working in tandem with the European Commission. I'm thinking of Austria setting out its objections to what other member states are doing in some places. Is this pulling at the the ties that bind within Europe? Will this have an enduring impact on the European Union in some way?
Well, I guess my feeling is that there are some jitters as a result of having delayed the vaccination process. That is creating nervousness around the countries, in particular when we start comparing ourselves to the US or the UK. You can see that the political environment is getting a bit jittery and very nervous about making progress. We are seeing the numbers in most of the countries actually going up again, and I can see that this is maybe the reflection of nervousness more than anything else. I don't think that will have a lasting effect. Within a month, we are going to see an acceleration of all the vaccination strategies in the European Union countries. And I think by then, I think things will calm down a little bit.
And will that mean that we won't see the dominant political figures in various European countries necessarily blamed for this at the ballot box? I mean, we've seen German local elections where, of course, the CDU didn't do as well as previously, and some suggested there was a link to vaccine rollout and handling of COVID-19 more broadly. But that wasn't the case in the Dutch election. I wonder if you think that leaders are going to be blamed by electorates here.
Yeah, that's quite difficult to say, actually. I think we have made also huge progress in the last year. So, whether we're going to allow this to just, undo some of the progress that we've done, that we've seen in the past year is, anybody's guess. I'm sure the public is not very happy about the delays to begin with. So I think some of this will be reflected in electoral results. We haven't seen it in the Dutch elections, but, we might see it in elections that are coming up in other countries. It's really difficult to guess at this point.
Let me ask you more about that Dutch election then, Maria, because it was really interesting to see the second party place being taken by a very pro-European party. And I wonder what that means to you in the Dutch context.
Well, it's indeed, they are the D66 is the big winners of these elections. They came second after having been fourth for a rather long time. The coalition that will be formed will be of the same parties, and the three parties, the first, the second, and the fourth, will probably pass the mark of having a majority in the parliament. It will be slightly more pro-European as a result of the D66 being quite such a big winner in this election. But let's reflect also on the fact that the first party, which is actually the biggest winner of this election, the party of the Prime Minister, the Liberals, they had an outright win. They got more seats than the previous elections, and they are quite sober when it comes to Europe. So, whether we're going to see a very big change when it comes down to the actions for Europe is anybody's guess. And also the third main partner in this coalition, the Christian Democrats, who were big losers out of these elections, they are quite sober when it comes to Europe. So, on the whole, I think the electoral outcome is one of continuity, with possibly a better tone when it comes to European issues, so a more cooperative, more friendly tone.
Yes, certainly continuity. I mean, Mark Rutte in power since 2010, as our graphic on the screen points out. So continuity there. But you don't think that this then leads Mark Rutte to adopt something of a softer approach around Europe? I'm thinking of the recovery fund, where we saw him very out of step with what France and Germany were arguing last summer. I wonder if that is less likely to happen now, or you think we just get more of the same?
Well, I think now the program, the fund is now agreed, so there's nothing to discuss on this anymore. What is to discuss is what we're going to do with the money, and there I can see heated debates. We'll see who will be the finance minister. Typically, it is the second party that delivers the finance minister. That would imply that the D66 will deliver the finance minister, and that would mean, therefore, lighter tones in the Eurogroup. But I mean, I remind you that the rather anti-EU parties and the rather extreme parties have not lost power in this election. They are a little bit more fragmented because the votes went to different parties, but the sentiment, the Eurosceptic sentiment in the Netherlands hasn't really subsided. It's still very much there, and therefore, the ruling parties and the coalition will have to take this into account.
Let me ask you just lastly about the Greens. The Greens lost some of their support, and I wonder if there are plenty of lessons in this for other European Green parties. Some Green parties do very well in other European countries, but the extent to which the Green agenda is co-opted by more mainstream parties, that has some tough messaging for sort of Green specialists, doesn't it?
Indeed, I think that's what's going on. The green agenda now is mainstream, and therefore there isn't a raison d'etre, as it were, for the Green Party anymore. And they need to reinvent themselves a little bit. All parties are very green. You see that D66 has a very strong green agenda, and therefore the public does not really understand what differentiates the Green Party from mainstream parties. And I think we're going to see this collateral damage to other countries as well.
Thanks very much, Maria. Really good to talk to you. Maria Demertzis, Bruegel's Deputy Director. Thank you for joining us here on the European Market Open. Coming up this Friday, we speak exclusively to the Chair of the European Banking Authority, Jose Manuel Camper, joins us next. We'll discuss the European banking landscape, the impact of COVID and the Greensill saga. We'll get his thoughts on whether regulatory changes are needed. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the European Market Open. 41 minutes into a European trading session that is a little bit weaker after modest gains yesterday. That was in the context of substantial losses in tech stocks over in the United States yesterday. And so we see a little bit of a disconnect in terms of the transatlantic story. And that seems to continue as NASDAQ futures point up by 0.8% and other US futures point to the upside as well. Let's turn to the European banking landscape. And Swiss lender Credit Suisse is racing to contain the widening fallout from the collapse of Greensill Capital. That's as the bank acknowledged the growing prospect of defaults in a $10 billion group of now frozen funds that the bank touted as some of the safest it offered. Credit Suisse has demoted one of its top executives and is withholding bonuses from some others. It's also overhauling the unit at the center of the saga. So this is clearly something that is having an impact on many businesses globally, some of them European. Joining us now in conversation, Jose Manuel Camper, European Banking Authority Chairman. Very good to speak to you, Jose, this morning on the program. Lots of different topics to cover, but I wanted to start with your response to what we've seen with Greensill. Do European banking regulators need to investigate or review what happened at Greensill at all?
Well, I think they already are. I think it's an important situation in which the BaFin, in particular the German regulator, and supervisor has taken already important decisions. There's already been, as you know, a moratorium that was imposed on payments. The moratorium was lifted I think it was earlier this week. And I think now payments are being made back to depositors, to deposit insurance scheme. It's a very important aspect. So, but this is obviously a situation in which we need to learn from these experiences. You know, accidents are born to happen, but we need to be well aware of when they happen, why they happen, so that we can learn from the future.
Does this expose any weaknesses in the way that the regulatory apparatus in Europe operates? Jose, we've got a UK firm owning an EU bank that sold investments to a Swiss mutual fund. Is this a complexity in terms of how it rubs up against the European regulatory apparatus?
Well, I would say I would not say that it points specifically to European regulators. I think it points to the complexity of some of these financial institutions that are in global nature that operate across many jurisdictions, and that cooperation among jurisdictions is always very important. And we need to be aware of their activities overall, you know, on a consolidated basis, not just on an individual entity basis.
Let me ask you some other things, other topical agenda items, if you like, in terms of the banking story. The ECB has expressed concern not all that long ago about how ready banks' balance sheets are for the bad loans that might hit on the other side of the COVID crisis once governments dial back their support. How concerned are you about bank balance sheets in that regard?
Well, I think that the ECB has shown concern on the fact that, you know, banks need to reflect in their balance sheets the increase in credit risk that has been happening through COVID. And I think that's a concern that we share with them. And I think it's important that banks continue to do a thorough assessment. I mean, partially due to the exceptional measures that were put by fiscal authorities on moratoria, public guarantee schemes of that, and measures of that kind, what we saw in 2020 is that despite a very large decrease in economic activity, you know, NPL ratios actually continue to decline, you know, and that's something that's at least paradoxical. And we know that there should be an incoming flow of NPLs and non-performing exposures in banks' balance sheets, and we need to be aware of that, and banks need to be cautious of that and provision early. I'm not concerned about the ability of banks to absorb those shocks. I am more concerned about making sure that they absorb it in a timely basis, because history shows us that the sooner that those losses are recognized, the faster that they can be managed, and the better for the overall recovery afterwards.
And do you sense then that banks have got the right level of flexibility then when it comes to their provisioning? Is that where it needs to be?
I think that the regulatory flexibility has shown last year that exists and that is there, and it has helped, you know, to smooth the impact of the COVID pandemic early on when there were generalized lockdowns. It's still helping now, where we're still in the middle of solving that situation. And I think that it's not an issue of regulatory flexibility, it's an issue of making sure that proper risk assessment is being done with an outlook of the situation which we are beginning to have for more and more clarity.
I know that the EBA has recently published a discussion paper on integrated reporting. Jose, I wonder, what is the driver for that? Give us a little bit of context as to what you're trying to achieve.
Yeah, thank you for the question. This is an important report that we publish for consultation. The two driving principles here is that, you know, there's been a lot of developments on regulatory requirements over the last 10 years after the global financial crisis. That has increased tremendously the requirement on supervised entities, and at the same time there's been an increase in supervisory institutional complexity on the regulatory framework. Also, technology has helped us in developing new ways in which we can do this better. So we should do a reflection, and that's the purpose of this paper, is to provide a reflection of how we can do reporting that is efficient. And for me, that requires two principles. You know, first, that there's homogeneity of the data that's being requested from supervised institutions. Second, that once the data is being provided by a supervised institution to a regulatory authority, that supervised institution does not provide it any further to any other authorities, but there's a sharing mechanism and a good coordinating mechanism on the different regulatory authorities so that data can be shared. Those are the two driving principles, and then we need to work out on the specifics of how can that be best provided given the new technological advancements that we have on RegTech, on SubTech, that allows us to be more innovative. So we are in the middle of the consultation. We hope for feedback from industry stakeholders and hopefully put forward alternatives that then can be pursued. It's a long-term project, obviously, because these reporting exercises are not easy to change, but I think it's trending in the right direction, and we should make sure that we pursue it.
When you consult with stakeholders on this, Jose, are you expecting any pushback, any areas of concern?
Well, I'm expecting, to be honest, that from the point of view of the industry, that they think that the reporting burden is too high. From the point of view of some of the established supervisory authorities, to make sure that they keep flexibility in the ability to have ad hoc requests, so they are flexible in new demands when they think that new risks are arising and which they need further information. But I think overall, as I said, that the two driving principles should be, I hope, so obvious and make common sense that we'll have agreement on that, so that although there may be differences, that we can push in the right direction.
Jose, I'm thinking, sitting here in London as I am, I'm thinking about the regulatory coordination or lack thereof between the UK and the EU after Brexit. And I know that a memorandum of understanding is still being discussed. That is the aim in terms of the financial services sector moving forward from here. Can you see any areas where it would benefit the EU to have equivalence with London? Will they be very limited?
No, I mean, I think in principle, as you said, the cooperation arrangement is important. We need to get that MOU approved as soon as possible, so we'll have a good basis in which we can go forward. As you said, equivalence is the basic tool that the European Union has to engage with third countries. The UK now is a third country, so it would be the normal way to engage with the UK. I hope that we can work going forward. I hope that equivalence, of course, is not about just where we are today, but also where we're planning to be in the future. And it's logically that as the situation evolves, that both the EU and the UK may want to have different perspectives in different areas. But I think that the principle of good understanding and good ability to be able to engage in what is that we want to do going forward and make sure that that's compatible to both of us will work. I mean, there's a lot of financial links, and this is obvious, between the EU and the UK, and that has resulted for the welfare of both countries. And I think we need to preserve that.
You sound more hopeful about the possibility of financial services equivalence than some of the voices we hear from in London. What kind of percentage chance would you put on it, or am I right to interpret that you are quite hopeful?
Well, let's put it this way, I'm an optimist by nature, and I think that the good cooperation between the UK and Europe in financial services is fundamental. I think the key driver here will be, as I say, it's not just what's our current situation, but which way do we want to evolve going forward, both jurisdictions, and to make sure that trajectory is in a way that sets sufficient common ground to maintain the good collaboration between the two countries.
Jose, thanks so much for joining us. Jose Manuel Campa, European Banking Authority Chairman. Thanks for joining us on the European Market Open. Coming up, US-China talks descend into bickering. We discuss the impact on markets with Laura Cooper from our MLive team. This is Bloomberg.
think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The pandemic has perhaps accelerated many of those trends that were evident before the pandemic, and they've also changed public attitude. There's a much greater appetite for change. You can see those trends happening before our eyes. You're seeing pavement widening, bicycle lanes increasing, more greenery. In that sense, the city is already becoming more ecological and greener.
The world-famous architect Norman Foster there speaking to Bloomberg Green. You can catch more of that interview. That is tomorrow at 11 a.m. London time. Tune into Bloomberg Green over the weekend. Now, we are 53 minutes into our European trading session, and we see losses here in Europe. A bit of a divide between what's going on in Europe and what goes on in the US. Laura Cooper joins us, Bloomberg's Markets Live macro strategist. And Laura, good morning. Just as we saw that divide as everyone was buying tech stocks, we see that divide as everybody's selling tech stocks. Today looks different, but it is once again the tech that divides, it seems. They're very different markets, aren't they, on both sides of the Atlantic?
Well, there certainly are very different markets, not only in terms of their composition. So the U.S. does tend to be more tech-centric, and that's why we've seen those gauges come under more pressure as yields continue their climb. Whereas in Europe, obviously, they're more exposed to those sectors that are going to benefit from that reopening trade. So those cyclicals, those value stocks. So ultimately, I think the action that we're seeing this morning is really more a case of that catch-up. We did have that French lockdown news in the later part of the European day. So we are seeing some catch up there, and just some catch up more broadly from the risk off tone that we've seen throughout the Asian session.
Yeah, really interesting to see that risk off tone and what drives it. We've been following, of course, intensively the talks taking place in Alaska between China and the United States, the first then since the Biden administration came into being, Laura. Is that really what's weighing on Chinese stocks? I mean, I see Chinese stocks down today, significantly so, in particular tech stocks, but that's been an ongoing story.
And I don't think it is the case that these kind of renewed U.S.-China frictions are feeding into kind of aggravating that sell-off. You know, yes, it is a risk, but I don't think it's the catalyst necessarily. It is all about just the tech sector coming under pressure. But I do think that those geopolitical tensions remain an underpriced risk, and that is going to feed through potentially into trade stocks. If we look at a proxy of trade uncertainty in the U.S., it's back to those pre-trade war of 2018 lows. And every time we see that gauge move up, that does tend to weigh on the NASDAQ. So that's certainly a risk to watch.
Thanks very much, Laura. Really good to speak to you this morning. Laura Cooper joining us there from the Bloomberg Markets Live team, where she's a macro strategist. Let's just get to the European equity market picture, US futures then, as we bring this hour of programming to a close. This is what we have for you right now from Europe. So as Laura was saying, we see this weakness in the European story, a little bit of catch-up being played with some of the news flow from yesterday, of course. US futures do point to the upside. NASDAQ futures up by 0.8%. It's been a very volatile day for energy as well. Oil prices now up by 1.6% after losing more than 7% in yesterday's session. So look out for the volatility in energy prices. And back to where all of this started, arguably, US 10-year, 1.6856 is where we trade. So a 1.6 handle on the US 10-year as we head to the US session. This is Bloomberg.
the faith, keep wearing the mask, keep washing your hands, and keep socially distanced. We're going to beat this. We're way ahead of schedule, but we got a long way to go.
So the American Rescue Plan is designed to put us back on footing so that we're poised to build back even better once we get to the other side of the pandemic.
Our basic situation is that we're spending a lot more money than we're earning. It's not an easy thing to change because what do? Spend less money?
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Good morning from London, Berlin, and New York on this Friday, March 19th. Our top stories today. Biden versus Beijing. It doesn't take long for top-level talks between the U.S. and China to descend into bickering. Putting his faith in the Fed, Nobel Prize-winning economist Paul Krugman rejects the idea that the U.S. could return to 70s-style inflation. And the National Football League's big score, a groundbreaking $105 billion television contract, includes a historic role for Amazon. There's quite a lot going on, and actually, happy Friday to all of you who've had a pretty busy week looking at central banks. Today, we had the Bank of Japan, of course, we had the Bank of England, and then we had the all-important Fed earlier on this week. Kelly, it's all about inflation, and now with Paul Krugman weighing in.
Yeah, it's all about inflation. It has been all about inflation, Francine. That is again true on this Friday morning. In the Asian session, I would note that we did see a pretty red session, especially the CSI 300 in China was down about 2.6%, really about those U.S.-China talks in Alaska that you just mentioned, Francine. The Nikkei was also down after the BOJ decision. It's going to focus its ETF purchases on the topic, so that weighed on that index. JGB's on the 10-year basically unchanged, even though the BOJ clarified that its trading range is actually 25 basis points. So keep that in mind. And the stock 600 over in Europe is fractionally lower on the day. Here in the U.S., though, futures trying to rebound after some relatively steep losses yesterday. The NASDAQ 100 fell 3% in the Thursday session, but futures are higher today, probably helped out by a stabilization in the bond market. The 10-year yield down 2 basis points to around 1.68% after hitting 1.75% in yesterday's session. It is, as Francine says, all about inflation. The dollar is slightly weaker. That may be playing into the rebound we are seeing in crude. WTI up 1.75% or so after a 7% plunge yesterday. There is some concern about how far the futures market has run and what the actual demand is looking like when it comes to the physical market. As for some stocks moving in pre-market trading, what you should watch come the opening bell in about 4 hours' time. We are looking for any movement in Chubb and Hartford Financial. They're not trading at this time, but Hartford rallied 20% yesterday after Chubb made a takeover offer for the company valued at $65 a share. Nike is lower by more than 3% after disappointing results after the bell, but better results for FedEx, and that has that stock higher by 4.4% or so before the bell, Matt.
All right, so let's take a look at what you should be watching today. The Bank of Russia releases its rate decision a little bit later. U.S.-China talks continue in Alaska. I would say that could be your focal point unless you're into trading technicals and vol. Watch today's quadruple witching day. Very exciting, the expiry of a number, the most possible options contracts. So that tends to boost volatility. I guess around 1 or 2 p.m. New York time is when you see it the most. I'm also excited, Francine, because we have Ray Dalio bookending the week. He kicked off Monday with, I thought, a super exciting LinkedIn post. And then Friday, tonight, he's going to be on a special edition of Wall Street Week with David Weston talking about inflation. You just heard him saying, you know, we're spending more and earning less. Yeah. What are we supposed to do? Spend less? And I understand that mindset. I couldn't do it.
Yeah, and I have to say there's more and more actually economists coming through and saying the truth of the matter is that even if inflation runs hot, it's easier for the Fed to deal with that than actually dealing with, stagflation or deflation. So I guess it's kind of like another prism or another lens that we should be looking at. We're also looking at banks, Matt. A lot of focus, of course, on these junior Goldman Sachs bankers that are not happy.
Oh, yeah, absolutely. That was great. A survey, I guess a self-done survey of 13 Goldman Sachs investment bankers saying they're working far too hard. I'm sure there are tiny violins playing for them everywhere you look in the U.S. this morning. You know, you mentioned inflation, and I've got a great chart from the Philly Fed. For our listeners in radio, I'll walk you through it this morning. Basically, the outlook, which is here on top, for general business activity is the highest it's been since 1973, which has statistically proven to be the best year in history. So we could be getting back to a 1973 level of confidence. However, the bottom half of the chart shows you that the index of prices paid is the highest since 1980. So that inflation really is hitting, whether Powell wants to see it or not, whether it's transitory or not. Francine?
Yeah, so this is what caught our eye today. So we're all over inflation. We're, of course, looking at the U.S.-China conversations that have, for the moment, descended into bickering. But a group of Goldman bankers are also begging for a better work-life balance. Analysts at the bank are asking their bosses to cut their work week to a mere 80 hours. In a survey, they complain that often spend 100 hours a week working, and it's detrimental to their health. Now, just a caveat, it is 13 junior bankers that have put this, but still, it's got Wall Street talking. Let's get more with our Danny Berger. Danny, what have we actually heard from these downtrodden workers?
Yeah, well, Francine, first, have you seen this presentation? The deck
have.
Yeah, it doesn't look remarkably like a Goldman Sachs presentation, even down to the legal boilerplate language on the bottom of it. You know, you and Matt both described it, but look, some of the quotes in here, they are pretty dark. Someone's saying, I can't sleep anymore because my anxiety levels are through the roof. My body physically hurts. Mentally, I'm in a dark place. I mean, these aren't exactly great things you want to hear from your employees. But look, we all know people who started out in the industry as junior investment bankers, and this is kind of the deal. You work really awful hours. It's very difficult. You put in the time for 2 years or so, you get paid a lot, and you can then go and work in private equity or hedge funds. This is kind of the career trajectory that a lot of people look at. But Goldman Sachs did take note of this survey, even though it was informal, even though it was only 13 people. Perhaps it's because it was formatted so well it caught people's eye, but also in this era where banks are looking at capping some of the bonuses and salaries people are able to get, perhaps they have to put on this more kinder face because you don't get that part of the bargain. You also, though, have to wonder, because this did go viral on social media, it was all over the various financial meme Instagrams. Is that another reason why Goldman Sachs has felt the need to take action? But they are saying that they might even take on less deals to make the workflow more manageable, Matt.
All right, well, I mean, it sounds to me like a lot what I heard from my pledges. But then I always said, I did the same thing. We all had to do that to get here. And in all seriousness, you know, doctors have difficult work schedules. Nurses have difficult work schedules.
Yes, exactly.
And also, a lot of people at 72, 73 are sitting with financial advisors saying, can I afford to retire? These men and women at Goldman Sachs are less likely to be in that position. So I guess this is one of those things that you have to do.
Pay the doctors
nurses,
more.
for sure. Well,
they work 80 hours.
Less so doctors. But definitely if you're working at Goldman Sachs, you're probably not going to be terrified of how you pay for your small apartment when you're 72. Rosalind Matheson joining us on probably what is the serious focal point of the day, and that is these high-level talks between the U.S. and China. President Biden took office looking to improve these relationships, but also to keep an aggressive stance. And apparently these talks have dropped now into bickering and recriminations. You may have expected that. It isn't Biden and Xi Jinping, Roz, but they may get together in person if this meeting goes well, right? That's what I heard, April 22nd.
Well, that's right. And this is the first meeting between senior officials under the Biden administration. And as you said, so far things have been pretty tense, especially in the initial session last night. You had each side kind of laying out some clear markers, criticizing each other, especially over human rights. China saying you can't point the finger at us on things like Hong Kong and Xinjiang when you have Black Lives Matter protests and killings of Asian Americans and so on. So the tone on either side was quite accusatory. It did seem to settle a bit in the final session last night, and there's one more round later today, and so we'll see how that rounds things out. But in some respects, they're each talking more to their domestic audiences because both of them have an imperative to sound tough. Xi Jinping has a big leadership meeting next year. Joe Biden has a Congress and an electorate in no mood to be giving China a pass. So some of it's kind of atmospherics, and there are reasons for them to cooperate, at least on things like climate change. But even so, there are those deep underlying tensions over how to deal with China as it grows in influence, both economically and strategically. So in a sense, the best outcome here would be an agreement simply to keep talking in a way that may lead to that potential summit, as you mentioned, later next month, but at least to keep the door open for starters.
Roz, thanks so much. And of course, we'll be following those talks very closely. They resume a little bit later today. Now, our international government executive editor, Rosalind Matheson. Now, coming up, we talk about inflation. We talk about some of the central banks that we heard from this week. The Fed, the BOJ was just a couple of minutes ago, and also the BOE with Luca Paolini. He's Pictet Asset Management Chief Strategist. And then a little bit later, we'll also be talking to Leslie Vinjamuri, Chatham House Head of U.S. and the Americas Program. We'll talk about Joe Biden. We'll talk about also Nord Stream 2, that pipeline between Germany and Russia. That's at 5:30 a.m. in New York, 9:30 a.m. in London, and this is Bloomberg.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Inflation expectations, it took a long time for them to get unanchored in the past. It took not just excessively expansionary policy under Lyndon Johnson. It took 2 oil shocks that sent inflation temporarily into double digits. It took seriously irresponsible monetary policy under Arthur Burns. It took a long time to get us to where we were in 1980. It took really more than a decade of screwing things up year after year to get to that pass. And I don't think we're going to do that again.
There are 2 types of inflation, okay? I just want to make this clear. We're used to one type of inflation, which is when the economy is too hot, there's a capacity constraint, and when demand presses up against existing capacity, prices rise. The big risk is of a monetary inflation, which would come because there would be more sellers of bonds than there are buyers, and the need for a lot of printing of money.
Well, that was Nobel laureate Paul Krugman and Bridgewater Associates co-chair and co-chief investment officer Ray Dalio on inflation risk. Now, for more of that interview, you can catch Wall Street Week tonight at 6 p.m. New York time. 10 p.m. in London. That's with David Weston. Now, joining us to talk about inflation and the markets in general is Luca Paolini. He's Chief Strategist at Pictet Asset Management. Luca, as always, thank you so much for joining us. When we look at your inflation expectations, so you could say they could actually overshoot the central bank's targets, but that would only be temporary. What if the markets don't see it that way?
Well, I think the risk here is that you have a massive fiscal stimulus. You have still the Fed basically printing money when the U.S. economy may be growing in nominal terms up to 10% this year. And I think you add to this the fact that commodity prices are rising. Well, you see almost a perfect mix on inflation overshoot. The markets are worried, but in a way, if you look at the inflation expectations, they look quite high relative to a few years ago. But in general, they are not incredibly high. So I think there is a little bit too much of a concern now for inflation in the very long term. But in the short term, I think a significant overshoot is almost inevitable in the next few months.
Let's say that there is an overshoot, that actually longer term that we see some real inflation. How easy would it to be, for the Fed to actually try and recalibrate without hurting growth too much?
I think it's the Fed is in a difficult position because I think it's pretty clear that even looking at their own estimates, they're expecting the unemployment rate to be well below 4% in a few years' time, inflation to be above their target of 2%. So if you have an overshoot of inflation, the kind of the pressure for the Fed to act is going to be quite significant. So the question is how they can do that. I think they have to do it smoothly. But I think falling behind the curve too much could be very dangerous, and at some point markets will actually send a very strong signal to the Fed. So I think it's the Fed is in a difficult position.
What a day to buy the dip, Luca, or maybe last night was the better timing, but depending on your view, you could wade into those big tech stocks at a little bit of a discount. You could double down on a treasury short. You could pick up Volkswagen shares. What do you think about the little bounce that we saw or drop, depending on, which way you're positioned yesterday?
Yeah. I think when you look at bond yields, we feel that, you get to 170, let's say 180, 185. That's probably a level where, in terms of valuation technicals, you can probably think at least to close the short position on the bond market. When you look on the equity side, I have to say that there have been a lot of rotations in the last few months. Think about from large cap to small cap, from DM to EM, from growth to value. I think the rotation into value is the one that, from our point of view, has the most upside, because you still have, I think, a good valuation support for value. And I think that for small caps, for example, is more difficult. Tech is a difficult one, because obviously in the long term, we like tech. In the short term, with the global economy reopening, valuation is still not attractive enough. We still prefer all the economy cyclicals rather than tech.
Well, and a preference for cyclicals would usually mean that you also would be interested in Europe and the value play there. How has your calculus around European equities changed, though, given the struggle that Europe has had with the vaccine rollout?
Yeah, we like value, but Europe, in a way, what is different this time is that Europe is in a slightly different economic situation. The US is basically booming mainly because of fiscal stimulus. Europe is struggling because of the vaccine rollout, because the fiscal stimulus hasn't been that effective. So I think it would be now the optimal time, in theory, to look at Europe. But I think the business cycle element, the economy is still too weak. So we prefer to stay in emerging markets for now. Potentially the UK market can surprise, but for Europe, it's probably a story for the second part of the year. It's still, I think, a little bit too early to bet on Europe right now.
Do you expect more spending, Luca, from the EU? I mean, right now the question is, can they spend what they've already earmarked more quickly? But do we get something beyond the 750 billion euro package?
No, I don't think so. I think in Europe it's very difficult to agree on this fiscal package you've seen in the past. It's not like the US. There are so many countries involved with different political agendas. There are elections, by the way, in Germany. I think it would really take a lot of economic pain for the European Union, for the EU, to act on the fiscal side. I think there is much more upside for action from the ECB, but I think in economic terms, the ECB can do what they can do is much less relevant and important than the fiscal stimulus could be. So I think it's for Europe is in a difficult situation in a way, but we feel that the second part of the year will look much better for Europe.
Got it. Luca, thanks so much for joining us. Appreciate your insight today. Luca Paolini is the chief strategist at Pictet Asset Management. Now, coming up, valuation discrepancy. Porsche holding, not the car maker, the holding, trading at a massive discount to the Volkswagen stake that it owns. We're going to talk to the Porsche CEO. It's a different it's kind of a different company, but they have the same name, Oliver Blume, a little bit later on. And I'm going to highlight that discrepancy so you can think about if you want to work that trade. My interview after 8 a.m. New York time, 12 p.m. in London. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of SPACs. We remain very confident on the competitiveness of the Hong Kong stock market.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua in London and Matt Miller in Berlin. Let's get the first word news now. And the Biden administration is considering whether to impose more sanctions to block construction of that gas pipeline from Russia to Germany. The Nord Stream 2 pipeline is almost complete. Bloomberg has learned the U.S. may sanction the project's parent company. Penalties on other companies are also a possibility. The EU has a chance to put coronavirus vaccinations back on track today. Regulators have given AstraZeneca's vaccine the all clear. Governments including Germany, France, and Italy say they'll immediately resume administering the shot. Several countries had suspended its use after reports of blood clots in some patients. In the U.S., a dozen states are expanding access to coronavirus vaccinations earlier than planned for every adult. That's accelerating the biggest such campaign in the country's history. It's also making strides toward President Biden's May 1st deadline for eligibility. And the National Football League has announced a new series of long-term TV deals valued at $105 billion. The package includes a historic contract giving Amazon exclusive rights to Thursday football broadcasts. That's the first for a streaming company. CBS and Fox will keep the rights to daytime games on Sunday. The deal starts in 2023 and runs for 10 years. So, Matt, $105 billion, it seems like a big number, but it is spread out over a 10-year period. These companies are paying between about $2 and $3 billion each.
Yeah, well, I saw the headline. I thought that Amazon was paying $105 billion for the Thursday games, and I thought, oh my God! But actually, it's going to be a number of different networks spread out over a 10-year period. I also was kind of pumped because I thought I'll be able to watch Thursday games from here in Germany on Amazon, but hopefully by 2023, my wife lets me move back to America.
There you go. If you say it every day on air, one day it's just going to happen, Matt, because I know she watches.
Hopefully
what I found interesting is that this is, of course, because it's inflationary, given that a lot of the traditional televisions still keep the rights, but actually they're now having to pay double the amount for the same games. Now, coming up, Leslie Vinjamuri, Chatham House head of U.S. and the Americas program. We talk about Joe Biden and Russia. We talk about Joe Biden and Russia. We talk about Joe Biden and Georgia. This is Bloomberg.
particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Well, this is Bloomberg Surveillance, early edition of Francine Lacqua in London, Matt Miller in Berlin, Katie Lyons in New York. Now, there's quite a lot going on in the markets. It was quite a big week. We got through it for now, Matt, on central banks. But once again, it's Paul Krugman actually saying on inflation, It feels like everything is moving on the back of inflation. He's saying, look, he trusts the Fed and we're not going to see the 70s style inflation that we saw in the U.S.
I mean, we're almost through it, right? We still have central bank decision coming through out of Russia. So definitely keep your eye on that, especially with the importance of the oil price swinging all over the place. But yeah, I think the consensus is with Powell for the most part. People think this inflation, if it comes or if it's already here, will be transitory. The thing is, the voices that are, the gold bugs and the people who are terrified of inflation, many of them have been for the last 10 years. Those are the loudest voices. And also sometimes they have the most exciting stories. So.
Yeah, let's see what the markets are looking at. Okay, let me rephrase it. We're over the G7 central banks for this week, for the moment. Kaylee, what are you seeing on the markets?
Yeah, that is true. Just don't jinx us, Francine. We still have a little bit of way to go before we get to the weekend. But in the markets, it's really a story we have seen play out time and time again. Yesterday, yields shooting higher, tech stocks sinking. Today, the reverse is happening. We are seeing futures positive really across the board, but it is the NASDAQ 100 that looks like it will be outperforming come the opening bell in about 4 hours' time here in the U.S. Futures up by about 0.7% as we see bond yields come in 3 basis points on the 30-year. Of course, the selling was really in the longer end of the curve, but the 30-year yield today is coming back in to sit around 2.4%. And Matt, you were talking about the wild swings in crude, a 7% decline yesterday for WTI. Today, we're getting a rebound up about 1.5%. We are above $60 a barrel once again. And Matt, I have a present for you on this Friday from me to you. The pre-market movers I am looking at right now are actually auto companies. Tesla is up about 2.25% before the bell. That may be part, you're welcome, of a broader big tech rebound. But another EV maker, Nikola, is higher by 3% as well. And we know that some U.S. auto companies, legacy traditional auto companies like GM and Ford, are trying to push into that EV space as well. They are both higher. Ford up 2%, even though last night it said it's had to idle some production due to that semiconductor shortage. Don't worry about it though, Matt. The company says it is already baked in to its financial guidance.
I don't know if we can call Nikola an EV maker. They definitely have an idea to make EVs, but I'm not sure if they've actually produced any quite yet. The cool thing about that group of companies, Kaylee, is that they have contributed to what some analysts are calling and economists are calling a commodities super cycle, and I happen to have a chart of that right here. It's something we talked about so much, and this is a main driver behind inflation, and it touches on so many geopolitical issues like China as well as oil. You can see how far we've climbed from the bottom of the pandemic in March. We just slumped, and then expectations for a snapback in demand, but also a lot of purchases from big companies like Volkswagen and General Motors to try and build an EV. They all need the same parts. They all need the same commodities to build these new vehicles, drove us higher. Now we've seen a dip. The question is, do you want to buy this dip as we get back down to the 50-day moving average, or do you think the commodity rise has been overdone, Francine?
Yeah, the question of the day probably also linked back to inflation. Now, the first high-level talks between the U.S. and China since President Biden took office have descended into bickering and recriminations. The Secretary of State, Antony Blinken, vowed to raise concerns about cyber attacks, the treatment of minorities, and Beijing's increasing control over Hong Kong. Now, China says the U.S. cannot speak from a position of strength.
China-U.S. relations has met unprecedented difficulties. It hurts the interests of people from both nations and world peace and development. It should not continue.
I do hope this conversation will be one carried out with confidence on both sides. So it's not lectures or long winding statements.
The United States itself doesn't represent international public opinion. Neither does the Western world.
The alternative to a rules-based order is a world in which might makes right and winners take all. And that would be a far more violent and unstable world.
With the wisdom of Chinese people, there is no way to strangle the Chinese people.
Well, let's get some analysis with Leslie Vinjamuri, head of the U.S. and the Americas program at Chatham House. Leslie, first of all, if you look at maybe the three top concerns or, things that are in the news for President Biden this week, it's, of course, what's happening in Georgia with the awful killings. It's U.S.-China and U.S.-Russia. Out of those three, what's more complicated for him to address?
Well, they're all three linked in a certain way, which is with all three of these, we are seeing the question of values, rights, right up front in the agenda. And quite frankly, given that the Biden administration is making it very clear that what they do beyond America's borders needs to deliver and speak to the American people, to American values, and especially to the working class, that middle class in the United States, I think they're all three really critical because, of course, the Biden administration needs to be able to deliver a productive, good, strong relationship with China and really to move forward America's investment in its own economy so that it can compete. And really, the last week of U.S. diplomacy, beginning 1 week ago with the Quad, setting that very clear agenda on vaccines, emerging technologies and climate, and then traveling, to meet with allies and taking this very tough line towards China. I think it resonates with the domestic concern this week as the president and the vice president travel to Georgia to talk to Asian Americans and to really shine a light on this conversation about hate crimes, about violence, about guns in America. So there's a real connection. And of course, the ratcheting up of the conversation about possibly extending sanctions on Russia. Yeah. We are seeing a clear, consistent line, but a hardening of position beyond America's borders.
Leslie, what will the Joe Biden administration relationship with China actually look like further down the line? Is it going to be one of, respect but difference, or is it actually going to be one that's even more complicated and harder than the one that President Trump had?
I think it's going to be harder because this is an administration that is very clearly setting out its agenda, and it's putting values forward in a way that appears to be non-negotiable. I think we always had a sense with President Trump that it did come down to, what deal he could strike. Clearly, Mike Pompeo got much more hard line on his ideological approach to the CCP. But Donald Trump was always sort of, looking to see what he could get on that first deal with China, whether they would deliver. Now we're going to see, a real focus on human rights, on values, but on technology and competing with China and doing it multilaterally. So I think this is going to be a much more difficult relationship. The fact that the Biden team, that Secretary Blinken and the National Security Advisor Jake Sullivan turned up 2 days after issuing an additional sanctions against 24 Chinese and Hong Kong officials, they were making it very clear where the U.S. stands on this question of China's domestic practices and beyond, and that sets it up for a very tense relationship. But what we saw, of course, was that China was pushing back very hard. Look at yourself, the United States, and they also signaled very clearly that China intends to work through the UN and through the UN system, and they draw this rather bizarre distinction between the UN system and the rules-based order. And that, again, is a signal that there's some very tough negotiations ahead when it
I got to ask about the trade surplus that China has with the U.S. or the trade deficit that the U.S. has with China. I know a lot of economists pointed out at the beginning of the Trump presidency, it's not a zero-sum game. This isn't the most important indicator to look at. And yet, Donald Trump really wanted to reduce this with tariffs. We can see from this chart that he failed at that. We continue to hit new highs on China's trade surplus with the U.S. Does that matter at all to you? And do you think it matters at all to the Biden administration?
Donald Trump was a master of focusing on bilateral trade deficits, and didn't achieve what he sought out to achieve. We've seen that. It's not that it doesn't matter, but the economists' line that is not the key concern. I think is going to be reflected in this administration. The approach to China is going to be much more serious, right? It's going to be about leveling that playing field far beyond the question of a bilateral trade deficit. It's about IP, it's about technology, it's going to be about 5G, competing on artificial intelligence. This is going to actually be, a concerted approach to really, I think, hold China to the line on market access. Again, on these broader reforms, I don't think that we're going to see that singular focus on trade, on bilateral trade, and on deficits.
Leslie, I want to go back to the U.S. and Russia, which we mentioned at the beginning there, specifically when it comes to the Nord Stream 2 pipeline. The Biden administration apparently is weighing sanctions to block the construction of that. What would the repercussions of that be, not just for the U.S.-Russia relationship, but relations between the U.S. and Germany?
Yeah, I think you ask exactly the right question, whether the Biden administration will go further. They've identified at least 15 companies that perhaps stand the risk of those sanctions and secondary sanctions. And I think the U.S. and Germany, are trying very hard to agree some sort of compromise to prevent that happening, because of course that relationship is critical. It hasn't gotten off to the best start, not least because Germany was at the forefront of pushing forward that EU-China investment deal days before President Biden was inaugurated. And so I think really staying on the same page with respect to the challenge against Russia is absolutely key. So I think there will be an effort to reach some sort of compromise, but it's going to be tough because Biden is under significant domestic pressure also in Congress to go hard on Russia when it comes to this pipeline and sanctions.
Leslie, thank you so much, as always. Leslie Vinjer-Murray, they're head of the U.S. and the Americas program at Chatham House. Now, coming up, Goldman's first-year analysts created a slide deck to complain about their working hours. So we have the scoop next. We'll look at the slides, and we'll look at what Goldman's is doing about it. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
I do think there'll be part of the world where a certain amount of people work from home permanently, certain sales, certain ops, so you can track the productivity, et cetera. I think there'll be a large portion who permanently work in the office.
The feedback that we've had from our people actually tells us that they want to work at least 1 to 3 days from home at some point in the future. So that doesn't mean for everybody, but certainly I think that is something which we'll be looking to explore in the coming months and years.
It is very much our goal to be back in the office together. Hopefully even to have some of our trainees this summer be at least partly in the office.
We're going to bring people back when it's safe, and we're going to give people notice. So, I'm certainly hoping with the increase in vaccinations that it's sometime around the summer, towards the end of the summer, when we can get back to life as normal. But we're going to play it by ear.
Bank CEOs weighing in on the debate about the future of the office. And here's a wrap for us of where exactly plans stand, because it has been just over a year since Wall Street had to send its employees out of office to stop the spread of COVID-19. But now that the vaccine is rolling out, many of them are eyeing the return. JP Morgan is welcoming hundreds of its interns back to its offices in New York and London this summer. Citigroup will bring workers back in July, expects about 30% of its North American employees to return through the summer. And Goldman Sachs wants to have more people back by then. We know the CEO, David Solomon, has called working from home an aberration, not a new normal. But it will be a new normal, at least a hybrid for some companies. Apollo and Deutsche Bank, as we just heard, experimenting with allowing companies to have, or allowing employees to work from home for a few days a week, while Ford has told 30,000 employees that even when the pandemic is over, they can come into the office only when they have to. They can work from home for the rest of the time. And in the tech industry, many employees may never return to the office again. Facebook has said as many as half of its employees may be remote permanently. Some employees at Microsoft and all employees at Twitter, if you want to work from home forever, you can, Francine. So we're seeing a very big difference between the way tech companies are approaching this and the way banks are. Banks want traders back at their desks. They want people back on Wall Street.
Yeah, I think HSBC was one of the few that also said, actually, you can have this hybrid model. But I love, Kaylee, the fact that we thought this was controversial, working from home and whether you were allowed to stay at home or not. And then, wow, you see that deck from Goldman Sachs junior bankers. I know there are only 13 of them saying they hardly sleep. They sleep 4 hours a night because they're worked so hard. And that's kind of got everyone talking, really.
Yeah, it absolutely does. And I think we're going to talk to Bloomberg Sonali Bostic about that right now, aren't we, Francine?
Yeah, so a group of Goldman bankers are begging for a better work-life balance. Analysts at the bank are asking their bosses to cut their work week to a mere 80 hours. Now, in a survey, they complain that they often spend 100 hours a week working, and it's detrimental to their health. Well, Bloomberg Wall Street reporter Sonali Bostic joins us now. Sonali, good morning. I have to say, so I read the articles, I saw the decks. It was pretty, incredible. So this is 13 employees, and I don't want to minimize it, but it's 13 junior employees. And what I'm trying to understand is, has it gotten worse because of the pandemic, or has it always been like this?
Well, it's really hard to know, Francine, because these are all new employees. But with that said, it's pretty remarkable that they organized in this way, right? We don't see that happen very often. The other thing about this is despite the number of employees, the concerns they raised are scary for any executive. Really, mental health has been a big concern among a lot of executives. They mentioned the possibility of leaving within a year because of these kinds of conditions. And retention is certainly an issue nowadays. It's not unique to Goldman, I would say, but it's something that obviously, Goldman is seeing very viscerally with this presentation circulating around. Workplace abuse was the other thing that they had brought up in this report, and any executive would have to take that seriously.
Was this, though, Sonali, I actually haven't seen the deck. I know everyone else has watched it, but was it a lighthearted presentation? We all know Goldman Sachs trainees are worked to the bone. That's why they become masters of the universe later in life if they make it. So was this their idea of fun, or was this like a serious cry for help?
Well, listen, when you start to put your mental health in pie charts, there's some element of, okay, wait a minute, this is serious. But, I'm reading you the report directly. Have you been experiencing blaming without justification? Have you experienced shouting or swearing? Have you experienced excessive monitoring or micromanagement, right? I mean, these are concerns that, again, are serious and, again, not unique to Goldman, right? There's a story about Apollo and people leaving despite efforts to keep the analysts happy and have some reprieve. Again, we're more than a year into this pandemic, so this is a bit of things coming to a crescendo, but it is something executives are going, this is something executives have tried to monitor and get attacked for years now, really.
Shonali, thank you so much. Our Bloomberg Wall Street reporter, Shonali Basak. Matt, a lot of people are talking about this story. There are some really funny stories about Goldman Sachs employees that may have ended up then, as you say, masters of the universe, reminiscing on when they started out like 30, 40 years ago. And it's pretty entertaining reading.
I can't wait to read Matt Levine's Money Stuff column on this, but I just can't gauge. In today's we live in a very PC sensitive culture now where we look at these things very seriously and people don't make light of issues like mental health. But, back in the day, amongst Goldman Sachs trainees or, medical professionals, fraternity brothers, you would joke about this kind of thing. So I just can't gauge which side this falls on.
Right. I mean, I think Goldman Sachs said that they will address and actually look into it, which is probably the right way at this point to deal with it. We'll have plenty more, of course, on Wall Street. Coming up, the debate over inflation continues with Bridgewater Associates co-chair and co-chief investment officer Ray Dalio and Nobel laureate Paul Krugman. Catch that conversation on the Wall Street Week tonight, 6 p.m. in New York, 10 p.m. in London. And this is Bloomberg.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Francine Lack in London, Matt Miller in Berlin, Kaylee Lyons in New York. Our Tom Keene is also here. He's co-anchor of Bloomberg Surveillance, and there's quite a lot going on with inflation. We heard from Paul Krugman, but Tom, today you're also looking at NASDAQ.
Well, I'm looking at the NASDAQ. We got to get things in perspective on a Friday. It's a really twisted week. I mean, it's just sort of a nuts week all in all. Let's get through the Fed meeting and all that. Let's get through it by looking at the NASDAQ and this horrific pullback that we've seen. Over on the left, 2018 down we go to the ugly beginning of 2019. And then, of course, what we saw in March of last year with the pandemic, both of these through a bear market. And right now we're down 8%. I mean, the humanity. Yeah. It is just outrageous how we're down 8%, Francine.
Yeah, and it's interesting, after a couple of weeks or even months of quiet, U.S.-China's kind of at the forefront again, and you wonder what that does to renminbi.
Well, we'll see. We'll see on the currency pull-in, and we'll have all that for you. With us on the pandemic, we're thrilled Peter Hotez will join us. Ian Bremmer will stop by as well. And on a burgeoning airline business in America, really timely, Helene Becker, arguably our interview of the day.
Tom, thanks so much. Can I still call you my former TV husband, or is that, is there like a moratorium after a couple of weeks?
I don't know. I'll talk to the lawyers.
Tom Keene, co-anchor
We're
Bloomberg
arbitration
Surveillance
lawyers.
there. No, there's quite a lot going on. Matt, you're watching cars.
Well, I'm always watching cars, but there's a lot of confusion this week amidst an incredible rally and drop in Volkswagen shares. One of the reasons is there's a company called Porsche. It's not the car maker that's owned by Volkswagen. It's a holding company with a 53% stake in Volkswagen. Here you can see the stake. It's just soared, but the holding company has not. So that's a delta that has to be brought back in check. And we may see that. I'm going to interview a different company's CEO, the CEO of Porsche AG, Kaylee, the one that actually makes the 911s that we all want.
Looking forward to that, Matt, and I am also looking forward to watching Quadruple Witching Day. Options futures on equities and indexes expiring today, Francine, could mean a lot of volume and a lot of volatility.
Yeah, but there's a lot going on also in the world of vaccine and, of course, in the world of foreign policy. We'll have plenty more on all of that. This is Bloomberg.
I expect to stabilize at a much higher rate than it was before the pandemic.
While traffic may continue to be weak, sales are improving.
We're going to continue to get some good data, but at some point in the second quarter, I think we hit that peak.
Where there is danger is in some of these markets that have been swept up into a speculative frenzy.
We're early in the economic expansion. We're not late. We're still officially in a recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
What a week from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance. Alongside Tom Keene, I'm Jonathan Ferro. Lisa Abramowitz will be back with us on Monday.
What's that about?
No idea, Tom. Long weekend for Lisa. Well
Very
deserved,
cool.
I'm
well
told.
deserved, yes,
well
absolutely.
deserved it is indeed.
Yes.
Equity futures positive, Tom, on the S&P 500, up 12 points on the S&P. We advance a third of 1%. Yields in, Tom, just south of 170, down a couple of basis
Well,
points.
it turned this morning, and after what a strange week, John, and the volatility we've seen, the originality of this week. I'm sorry, the research stream right now is very quiet. And, John, we are going to get a wall of rethinking into the weekend to get us into March and on to April in this bizarre pandemic economy. We've got a great set of conversations to set the weekend.
And looking forward to catching up with Ian Bremer of Eurasia Group.
Yes.
What on earth is happening between the United States and China? What a 24 hours on that
Well,
front over in Alaska, Tom.
And John, absolutely right. And, I said to Kieran Buchanan, I said, the Germany lockdown stuns me. John, Paris in lockdown, Germany in lockdown. We're out of touch in New York.
Hey, Tom, look, we were talking about 100 million vaccine doses in America in 100 days. We did it in 6 weeks with this administration. We're averaging now 2.5 million over the last 7 days. And what are we discussing in Europe? A third wave. And the lockdowns that you've just described. And that's the transatlantic divide that I think has dominated the conversation on this program now for the last couple of months.
It's there, and it's not only in the central banks that we focused on this week, John, but it's in the markets. I just featured with Francine, Matt, and Kaylee the idea, the humanity. The NASDAQ, John, it's just down 8%. So, I don't want to hear this correction bear market stuff through
After
the
a
3
massive
hours.
move through 2020. Here's the price action this morning, guys.
Please.
Good morning to you all. We look like this on the S&P 500, positive 11, call it 12 on the S&P. Down on the week by about 0.7%, coming into Friday on the session, up by about 0.3%. In the FX market, euro weaker, dollar stronger, 118 handle on euro, dollar at 118.91. And in the bond market, Tom, there it is, 175 yesterday. Had a little look at that, came back, 168.56 right now, in a couple of basis points.
We pull back. We see it in the currency market as well. Euro dollar 118.91 really shows the stasis there. John, it's just it's a nudgy Friday.
I'm with
you.
you.
I think it gives us time to concentrate on some of the theory, the themes forward.
Well, let's think about the theme of the week, Tom, capitulation. And capitulation not just from the sell side and the buy side and the people that come on this program, from the Federal Reserve as well, updating their forecast for the first time in 3 months, and GDP with a 6 handle for this year. And Tom, when you look at the forecast from the Fed, and I think we've got to keep discussing it, these numbers are going to be fantastic, but they're not enough to change the course of monetary policy at the Federal Reserve. And that's the new framework kicking in.
Clearly an incremental Fed. I think we saw that in the press conference as well. But, John, my theme for the day is the idea, the new theme of guessing over demand, playing off of Dan Alpert and his wonderful The Age of Oversupply. Is this going to be the age of over demand with a boom economy that none of us have ever lived? What is the demand dynamic going to be? And Mr. Rogers, I know, is going to help us here.
Hugo Rogers joins us now, Dowtech Bank and Trust Chief Investment Officer. Hugo, let's start there. Why can growth be even better than what we've been told this week so far?
Well, it's the pent-up demand. There's plenty of firepower. There's $1.7 trillion of excess savings. There were huge transfer payments last year. There was real suppression of consumption that people couldn't consume. They were locked down. There's $1.7 trillion available to them. Stick another $1.9 trillion from the stimulus bill, the ARP, and you've got this huge wave of potential spending. Now, the real question is, will that be unlocked? Will that be unleashed? Will the savings rate remain elevated? And we don't think so. We think there's a psychological release that's available here. So why not go out and spend? Now, I think what's perhaps more interesting is what will that be spent on? New cars, durable goods? Probably not. But if you've been locked down for a year, you probably want to go away on holiday. If you want to go to your favorite restaurant that's been closed for a year, you're going to if you can. So we think that there's a almost like psychological release as much as anything else, and plenty of savings and plenty of money sloshing around to spend.
Let's put some numbers on the rhetoric, Hugo. What are you looking for?
So effectively, that 6.5 GDP number, why can't that be higher as we get through the second half of the year? Retail sales up strong double digits year over year. Those are the sort of numbers that we're looking at by the time we get into Q3 and Q4, we think.
I look, Hugo, at the equity markets, and I want to know how they will react to the demand that you're predicting as well. Do you just assume a huge revenue impulse?
I mean, look, that's exactly the question. The economy and the markets are two very different things. If we move through a period of what we see as normalization now into overheating, actually there can be a negative reaction in the equity markets because discount rates rise. And you can see the early stages of that right now. You can see the questions that the market is wanting to ask the Fed. How far do rates have to go? How fast to actually crimp the bull market that we've seen? And those two things can occur at the same time. There can be a wave of revenue, a revenue impulse, a profit impulse. We see lots of operational leverage coming through, so plenty of earnings upgrades and so on. But at the same time, if discount rates move up too far too fast, you can see big parts of the equity market not performing in this world.
What are you committing to in the equity market? I mean, we've had a January 1. It's been an extraordinary early part of 2021. Have you reallocated at Deltec?
Yeah, I mean, we reallocated quite hard from about Q3 last year is when we started running into the election with the expectation that Biden was going to win. We started seeing the risk of even more spending and inflation rising. And more than that, you can see the optionality. The underperformance of value over a 6-year period was absolutely colossal. So we started that rotation at that period of time. The bonds that we'd owned through the last couple of years, so 2019 and 20, were brilliant. They worked very, very well for us. So we began that rotation in October, accelerated through November, and now we are exactly the other way around. We are underweight bonds, underweight duration, and overweight the reflationary assets. And that's really worked well for our clients.
You know, Hugo, sitting in this seat, we get to talk to a lot of people, and I still can't decide whether growth expectations are peaking or whether there's still a wall of worry to climb. Tom, this came from Bank of America in the last couple of days, and I'm going to quote them. The latest worry is rising bond yields and inflation. Interestingly, we've gone from all that skepticism about a no V-shaped recovery straight to the opposite end, inflation, all within a few months. Worriers are going to worry. Tom, do you get the feeling this is a wall that we can still climb, or whether growth expectations are peaking here?
I think it's a fixation right now, and there's a lot of bad theory out there about inflation, and particularly, John, as you addressed yesterday, causation and correlation and how it folds into inflation. I thought David Rosenberg, very lonely in a don't worry about inflation camp, was great. But John, and this is with Hugo and with everybody else we're going to talk to today, there is a fixation right now on inflation theories that maybe don't work in the original recovery we see.
So Hugo, let's do that right now. Is that another brick in the wall of worry that we can climb through the year ahead?
The conversation about inflation is quite contorted, we think. People are getting schizophrenic about it or having problems with it, but we're normalizing. People have to remember that we've come from a fear of massive deflation. If you're looking at the long-term inflation expectations, they've moved from below 2, so below the Fed's target, to between the low end of between 2 and 3%, which is the long-term range. So actually, we're just normalizing. We're turning, in terms of long-term inflation expectations, we've turned from a fear of persistent inflation caused by technology and globalization through to a normal period. We have not seen a breakout in long-term inflation expectations, which is actually when you start to worry. We're nowhere near yet. Those big weights on the price regime remain intact. So people need to actually rein in their rhetoric here. You know, look at where bond yields are now, 1.7. This is like barely normal. We're coming from a period of extremely low interest rates. I think the speed has enough to cause ructions, but in terms of absolute levels, they're not to worry about.
Hugo, it's a tough life. You're in the Bahamas in February. and into March, and all of our viewers and listeners worldwide are in massive sympathy. You have a massive, massive advantage of your distance from Wall Street. What's the zeitgeist right now that you are most in disagreement on?
So everybody is coming over to understand that that growth will normalize. We are in disagreement in as much as we think that there is a strong wave of pent-up demand coming through in particular sectors. We are also in disagreement about whether inflation really matters yet. We're going to see three handles on the CPI. We're going to, but the Fed is going to ignore it because they've said they're going to ignore it. They've said they're happy to have overshoot. So we're less worried about that. But what we are also thinking is that the best defense is actually to own the cyclical assets. The best defense against an overshoot, which could happen later in the year, is actually to own cyclical assets, kind of traditional inflation hedges like commodities and commodity-related companies, and actually don't defend by following, defend by staying ahead. And we think that many, including the Fed in some ways, many market participants are actually following rather than wanting to stay ahead of that wave.
Hugo Rogers, over in the Bahamas. Hugo, thank you. We're playing the smallest of violins. I'd play a small violin for you, Tom. They're all out on loan for the Goldman Sachs analyst class of 2020. Apparently some really difficult times going on over there.
Yeah, I got
on
real
100, 150K a year. Well, let's talk about it. Which way do you want to go?
I basically want to go and say everybody works a lot of hours. I mean, it's understood. It's almost a medical equivalent to residency and intern. I would defer to the people in the hallways that are working in Goldman on the workload and that, but I'm going to be honest, and I've enjoyed this, the 7 day a week, you know, it cranks up and you get out way past 70 hours, 80, 90 hours, I've done it.
Mental health issues, clearly something Goldman have got to respond to.
I think it's more the pandemic.
But on the pandemic, you're right. But I think, Tom, just the workflow, come on. Is this a generational thing? The deal used to be, this is the deal. These are the hours. This is what you've got to put in.
Yeah, the single best.
That was the deal.
Yes, and the single best conversation on this ever, we'll talk about it through the show, is Stephen Roach of Morgan Stanley sitting on the runway at Dulles.
Looking forward to that. Looking forward to that. Coming up a little bit later, Steve Cheveron, Federated Hermes Portfolio Manager from New York City this morning. Good morning to you all. Alongside Tom Keene, I'm Jonathan Ferro. We'll get to his thoughts in just a moment. Lisa Abramowitz out for a long weekend. Futures up 10. We're up 0.2%. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The deep divide between the US and China hasn't changed, even with a new president in the White House. The first high-level talks between the Biden administration and Beijing immediately descended into bickering and recriminations. At the meeting in Anchorage, Alaska, each side criticized the other over human rights, trade, and international alliances. And the Biden administration is considering whether to impose more sanctions to block construction of that gas pipeline from Russia to Germany. The Nord Stream 2 pipeline is almost complete. Bloomberg's learned the U.S. may sanction the project's parent company. Penalties on other companies are also a possibility. And oil is heading for its biggest weekly loss since October. A sell-off has been driven by concerns that recent gains had just been too rapid, considering mixed signals about demand and a rising dollar. Still, oil prices are more than 20% higher this year. And the National Football League has announced a new series of long-term TV deals valued at $105 billion. That package includes a historic contract giving Amazon exclusive rights to Thursday football broadcasts. That's a first for a streaming company. CBS and Fox will keep the rights to daytime games on the Sunday. The deal starts in 2023 and runs for 10 years. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
expect that face-to-face learning is the ideal, but I don't think that we are ever going quite back to that. What we're seeing is more of this integration of the technology into the day-to-day. We have seen that schools have had this kind of trial by fire in terms of trying to reopen successfully, and that many schools have had to use a system of using different ideas around what it would take to reopen and then pivoting when those ideas did not work well, meaning that some have had to go back and had to close. And that's been a global challenge.
90% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds on the global economic recovery.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
What I would argue is we want to get back to where we were in 2019, and we want to go beyond that. And that is really the foundation between Build Back Better. So the American Rescue Plan is designed to put us back on footing so that we're poised to build back even better once we get to the other side of the pandemic.
Cecilia Rouse there, the U.S. Council of Economic Advisors Chairman. From New York City this morning, good morning. Alongside Tom Keene, I'm Jonathan Ferro. Lisa Abramovich back with us on Monday. Here's the price action this morning. Equity futures higher, positive. We head north on the S&P 500, up 0.2% on NASDAQ 100 futures, up about 0.5%. Some stability in the bond market. 168.91. We come in a couple of basis points on 10s after a little look at 175 in yesterday's session. Euro dollar south of 119 at 118.97, and we come in a little more than 1/10%. Weaker euro, stronger dollar in the mix. Amazing. It's just been a week since we've passed a $1.9 trillion plan down in Washington, D.C., Tom. But the story in Washington has got to be on foreign policy over the last couple of days. From Russia and now a spat with China, all in the space of what, 24, 48 hours?
You come off late January in the first 100 days of a Biden administration, and just this week alone, as we look through the week, has been a foreign policy week. And the ballet, I would say, folks, what's so important here is the continuum of a foreign policy has simply been shattered. Emily Wilkins joins us now, our Bloomberg government reporter. Emily, there is a continuum here of Trump administration diplomacy over to Biden administration diplomacy. Did Secretary Blinken run into the effects of Trump diplomacy yesterday with these sharp words in Alaska?
Well, I think we knew going into the Biden administration that President Biden's stance towards China was not going to be what Vice President Biden's stance towards China was, that things have changed very much within the last 4 years of the Trump presidency. And it was something where, we see the Biden administration agreeing with the Trump administration on sort of how to handle China with things like human rights abuses, which of course were brought up in the meeting. But I think even though there were expectations that this meeting would be contentious, there's still a bit of surprise about exactly how contentious it was for the first meeting between the two.
What's the why? Obviously, the Chinese decided to take this tone among your reporting, Kevin's reporting and such, what is the why for how the Chinese changed this meeting?
So I think for this particular meeting, both sides kind of went in with the idea that they needed to show strength. And of course, sometimes how politicians show strength is that they're not afraid to engage in a little bit of heated debate back and forth. I think you see, but from both Democrats and Republicans, you've really seen a lot of bipartisanship in the U.S. Congress on the issue of China, that they really need, the U.S. really needs to take this very sort of tough stance. And I think you saw that reflected a bit in the interaction.
And Emily and John, I think this is so important. Laura Jakes has it in the New York Times this morning. Mr. Yang, the leader of the Chinese delegation, turned directly to the TV cameras and said in English, "Wait." He then launched into another long critique of U.S. policy. Yeah. John, as you alluded to early, this was unprecedented.
I think we have to describe how truly original this moment actually was. Typically, this stuff is so well orchestrated. You have the U.S. delegation making their piece. They talk for a couple of minutes, and then the Chinese delegation will say their piece, and they'll talk for a couple of minutes. And the timing will be agreed beforehand, Emily. These conversations take a long, long time before we actually see what took place yesterday. And then Secretary Blinken told the press to stay in the room so he could snap back. Now, what I'm trying to understand right now, back and forth, largely for domestic consumption. This is what a spokesperson for the Chinese delegation has had to say. When delegates arrived in Anchorage, not only did they find the cold weather of Alaska, but also the cold way the U.S. treated their guests. Once again, domestic consumption. Emily, this is rhetoric. What does it actually mean for policy? What's the substance of this? Where does this lead?
But I think for the policy, it does tie it back to politics and politics that you've seen in the U.S. You know, China and strength on dealing with issues of China was something that Democrats and Republicans both campaigned on. You saw President Trump allude that he had done a really good job with China. And you did see that actually come out a little bit in the vote. This past election, you did see more individuals sort of go for Republicans, believing that they would be able to sort of stand up to China in a big way. And so I think you're also seeing Democrats also try to go for that. And I think at the same point, China is trying to portray strength as well to its citizens. And so you have sort of all these political dynamics here. And I think that you're going to wind up seeing additional policy, additional sanctions on China, Chinese businesses and Chinese officials from Congress within the next several months.
And increasingly, Emily, this is not about economics. It's about human rights issues within China and China snapping back about social issues within the United States. And whenever you talk about the prospect of human rights issues in China, you get told the same thing. Don't interfere in our internal affairs. Emily, is this going to be the hot button issue between these two countries, or does it get back to the economics that dominated the previous administration?
I think that both of these things are certainly front and center right now. I mean, I think that the story about the Uyghurs and what is happening there, that's something that's really hit sort of mainstream American media and that Americans are cognizant of and aware of. And at the same point, as you correctly pointed out, you did hear the Chinese officials shoot back about Black Lives Matter and those types of protests in the U.S., sort of trying to put the spin on human rights right back on America. And so I think this is an issue that really moves people, perhaps emotionally a little bit more so than the economics. But look, I mean, given the strength of China on the world economic stage, I mean, this is definitely going to have to be something where the U.S. and China continue to clash and negotiate and talk on this particular area.
To be clear here, can we forget these two parties getting together and singing Kumbaya at the end of April on Global Earth Day?
I mean, we're going to have to wait and see. I think sort of the decision on whether or not they'll meet on Earth Day kind of depended on this meeting. And so far, it seems like this meeting is off to a very rocky start. So I would say remains to be seen on whether they have that second meeting around climate change.
Maybe that's the bridge to reconcile some differences. I have no idea. What a phenomenal moment in Alaska. Bloomberg government's Emily Wilkins. Yeah. Tom, truly, and I mean this, truly original to see what played out in the last day.
Well, we're going to see more elements of that, and part of it comes from the abrupt shift of one administration to another. But yeah, I'll take it. It certainly sets up for an eventful March and April, and all of that, John, is about the surprise. We make jokes about it, but really, I would suggest almost football history and sport history was made yesterday, John. I mean, the scope and scale of the loss of Tottenham to the team from Croatia Croatia was truly extraordinary, wasn't it?
The Croatian forward was phenomenal. Are we really going to talk this up like the sporting event of the last century?
Look, I think we're doing March bracket here with the college basketball in America.
Very long
we're
for
celebrating sport, and Premier League has been great. I don't really understand all this, John, but I could see out there here was a world-class team with a world-class budget sleepwalking.
This was one of the European competitions that took place yesterday evening, Tom, and Tottenham, your Tots, no longer in that particular competition anymore. And what this will come down to now for your team, just so you understand what's going on at your club, is that they need to qualify for the Champions League. And to qualify for the Champions League, which is the bigger European tournament, you play on Tuesday and Wednesday nights, Tom, and not on Thursday nights. That's where the money is, and right now they're outside of the top 4 places in the Premier League. So I think they've got a big game against Villa coming up this weekend.
Do their stars leave? I mean, was the loss so great that they lose their name people like Mr. Kane?
If they don't qualify for the Champions League again, then maybe some of the big stars want to leave. Is that our piece on British football
nailed that,
today?
John.
Thank
and
you.
AC Milan,
that.
we didn't have to say that AC Milan lost.
They went to the exits as well. But I predicted that anyway. Coming up on foreign policy, Ian Bremer of Eurasia Group, an important conversation. Equities up, yields lower. This is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
From New York City for our audience worldwide, this is Bloomberg Surveillance Live on TV and radio. Here's some of the price action this morning. Equity futures advancing on the S&P 500 by about 1/3 of 1%. The Nasdaq snapping back by 0.5 of 1%. Still down on the week, coming into Friday by a little more than 1 full percentage point. Can we eat into that just a little bit after this move in the bond market? Phenomenal to think about how it feels in the bond market versus what we've actually seen in the bond market. 10-year yields have had a move of about 6 basis points this week. It feels so much bigger than that because we haven't had a week where Treasuries actually advanced and yields declined since the end of January. It's been 7 weeks, 7 continuous weeks of yields climbing. This morning, yields in a couple of basis points on 10s and 30s, 169.27. On a 10-year, on a 30-year, 242.61. We come in a couple of basis points there as well. As yesterday, we printed the new post-pandemic highs on a US 10-year just north of 175. Each and every individual single central bank around the world right now has to grapple with this in their own way, Tom. And Japan's had to do it in their own way too. So switch up the board and finish on this. The JGB 10-year, which has a yield of about 11 basis points. There is a band around zero of 25 basis points either side now. They're saying they've clarified that. Tom, most people in the market see that as a widening of the band, and I think language matters to market participants. So that yield right now, Tom, 11 basis points, 25 basis point band around zero. What does that mean for the future? Japan's going to stay here. And I think Michael McKee asked a really important question at the news conference.
And didn't get an answer.
Had elevator music played over the top of it. The chairman batted away, and I don't know if he did hear it. If he did hear it, he pretended he didn't because he didn't answer the question.
Exactly.
And I think it is worth asking that question. The Federal Reserve has come out with a series of forecasts and told us these are the numbers that they think will happen in the next 3 years, and this is what we won't do. If we see those numbers, we won't hike interest rates. And I think what I understood this week, and I think the chairman did a good job, and most people agree with that, what I understood this week is what they will see in the future that won't lead to rate hikes. I still don't understand what actually they need to see to lead to rate hikes. And I think, Tom, it's not 2.1% on PCE. It's not 2.2.
No, I don't think it's any of that detail.
What is it then?
It is ex post. They're going to wait and wait and wait.
But wait to see what, Tom? Wait to see what? 2.5?
They're going to wait to see a combination that leads to their mandate, which is full employment, and there's almost a social aspect to that. Now, you know, we get to 3.3% unemployment quickly. That changes the tune.
Sure.
Other than that, they're going to wait.
Well, I agree with you, but to Mike McKee's point, Tom, maybe they're waiting, and they're waiting, and they're waiting, and they're waiting, and we see a repeat of what we saw in the last cycle in Europe.
There could be.
And the last couple of decades in Japan. And I think that's the question Mike is asking, and I don't have a view on it right now. I just think it's a question worth asking.
Well, on a first-order condition, they're going to get back to February of this year before the pandemic. We will rip up the script here. We are honored to bring you Ian Bremmer today with Eurasia Group. His top 10 risks did not include rudeness in Alaska, but nevertheless, that's what we need to focus on, and we're hugely advantaged that Dr. Bremmer could join us this morning. Ian Bremmer, at the Geneva Conference of 1954, the Secretary of State of the United States refused to shake hands with a gentleman from China. We then moved on and oscillated to the wonderment of ping-pong diplomacy of 1971. What was the ping-pong diplomacy across those two tables that we witnessed yesterday?
Most important bilateral relationship in the world, also the most challenging for the Americans to manage, certainly one of the more dysfunctional. And it shows that Biden and the Biden administration have been talking about China and operating largely in a vacuum over the first 50 days. And that's, as a consequence, been very easy to talk up how tough they're going to be on China. And now they're actually engaged with China, and the Chinese government is having none of it, right? I mean, their belief that they don't need to be talked down to by a group of American exceptionalists, the Chinese belief that their system is every bit as valid as legitimate, and the Americans don't believe that. Right. So that's pretty core. It's pretty fundamental.
What is the debris here of Trump-Pompeo? Do you link the two, or is this separate and discrete to maybe the transfer from Obama to Biden?
They're very similar in terms of orientation of actual policy issues. Whether you're talking about Taiwan or Hong Kong or the South China Sea or intellectual property theft or cyber or trade, there's not an awful lot of daylight between what the Biden administration is concerned about and what the Trump administration is concerned about. We can cherry pick a few issues where you see some differences. Even the Uyghurs, where Trump never talked about human rights, but the actual policy under Trump, Biden, very similar. Where you see an enormous difference is that, number one, the Biden administration is trying to work very deliberately with allies in advance, trying to coordinate U.S.-China policy with the Quad, and that means the core allies in Asia, not including South Korea, because Japan has a problem with the South Koreans, but Australia, Japan, and India, and also core allies in Europe, the EU3, less successfully because the Europeans do not view China the way the Americans do, and that, of course, is the UK, France, and Germany. None of that coordination was happening under Trump. The other big difference between Biden and Trump is that the Biden administration is actually having a policy review. What's that? With principals across the cabinet that are actually trying to work out a strategic policy that then Biden will discuss with the principals and make a calculated, calibrated decision on how they're going to roll that out. Trump was a game time quarterback. He sees an opportunity, he throws the ball. He's not waiting to see what kind of a review is going to happen from his, various members of cabinet who obviously aren't as bright, shouldn't be listened to the way his judgment carries. So it is quite different in terms of how you operationalize what those relatively similar core policies.
So, Ian, approach is going to be different and emphasis will be different too. So let's talk about approach just briefly. And I think you mentioned the most important aspect of trying to get a multilateral approach together. That was just Europe. Where's Germany on this? Where is Europe on this? And is there actually any space there to get Europe on board?
The Europeans are, of course, more aligned with the United States than they are with China. But the Europeans are making very clear that if the United States is heading towards a policy of containment with China, they are not on for that. I want to be clear. In the United States, it is an absolute core national security agreement across the political spectrum that China is the most critical adversary of the United States. The Europeans don't buy that at all. China is not their core adversary. And that's a real problem. And that is going to get harder to bridge because of Brexit, because the United Kingdom is the European country that is most aligned with the United States in national security orientation, in diplomatic orientation. They are no longer, of course, a member of the European Union, and their relationship with the EU is increasingly fraught. And also Angela Merkel, who is sort of the voice of stability and reason and multilateralism in trying to keep the Americans and Europeans on side, is losing power, is leaving power. And the next coalition in Germany is likely to be a bit weaker. Emmanuel Macron is going to be the most important strategic voice of foreign policy in the continent. And his orientation is all about strategic autonomy, European sovereignty, a third way. It is going to be very, very challenging. I'll tell you, the markets have been talking about how there's a honeymoon between Biden and the Europeans, and certainly the Europeans are much happier to see Biden than Trump. But I would argue that even though the decoupling of the U.S. and Europe has decelerated under Biden, it is continuing. And it's continuing for structural and strategic reasons, irrespective of the fact that Biden and his core team are fundamentally transatlanticists at heart.
Not just the issue over China, also the issue over Russia as well, with Germany looking lonely, increasingly so over the last couple of days. Ian, let's finish on this. Where do you see a space for success? What can this administration achieve on the foreign policy front with regard specifically to China?
The United States and China are massively interdependent in terms of trade, in terms of their purchasing of our treasuries, in terms of the global economy, and responding to things like climate change. And so the simple fact that that relationship persists in a relatively stable way, I mean, you might not consider that points on the board, but frankly, it's important. In terms of progress, we're very far from progress, but what you want to watch for, and you anticipated this in your last segment, what's going to happen around Earth Day? What's going to happen around John Kerry, who's in many ways the most important new appointment of the entire Biden cabinet, former Secretary of State, John Kerry. There is no question that if you are going to resolve or even make significant progress in global climate, the two largest carbon emitters in the world need to have some willingness to work together. That is it's a tall order, but it's also a critical concern of both countries. We will see where it goes.
Ian, always great to catch up. Great to see you. Ian Bremer there, Eurasia Group and G0 Media president. And let's not push that to one side, Tom. Earth Day and global climate issues, not just a bridge that China can reach across to with the United States, but also a bridge the UK has tried to use to get through to this administration in the United States as well. And increasingly, I think many countries feel that is the way in with this administration.
Yeah, I look at this simply as the domestic modeling that you see day after day from both parties on both sides in America. And the idea that China will not react to the domestic conversation in America is just nonsensical. Of course they're going to react to it.
And they are reacted to it. I totally agree with you, Tom. Something else we've got to react to just quickly is the move in the Russian ruble.
Yeah,
the ruble a little bit stronger. A headline coming from the Bank of Russia. They see a rate hike possible at one of the next meetings. And this has been a story this week, hasn't it? Brazil first, Turkey next, big rate hike from Turkey, and Russia in the mix maybe in the future.
Yeah, I mean, this is a new theme, isn't it? I mean, it's diametrically opposed to the developed nations.
EM does not have the luxury that DM has right now. And Tom, we've started to see the tightening. And you know how this works. When one goes, the cycle starts to build, doesn't it?
The way this works, John, is Damian Sassower comes on talks to us about emerging markets, but we really don't care because we really want Damian to talk about the brackets in college basketball because he's expert.
Or is this
I'm trying to get him on just to talk about Purdue and Gonzaga.
Let's get Damian Sassower on the show. Let's try and find a little space for him.
You know, I need to talk to him about the brackets.
I need to talk to him about the ruble too. Stronger. Maybe a rate hike coming from the Bank of Russia. Equities up 11 points.
You're laughing at me
about
a
31%.
John, you're laughing at me
Yields down a basis. Look, I know why you're supporting Purdue.
John, boil her up.
We've got both got to boil her up because the manager supports Purdue. So
that's amazing.
We do this every year.
Boil her up.
Boil her up, yeah.
Where's Purdue? Iowa?
Indiana? Is it Indiana?
Oh, yes.
Yes, thank
Good
you.
Guess.
Thank you. From New York, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. In Alaska, the first high-level talks between the Biden administration and China turned tough almost immediately. Secretary of State Antony Blinken raised concerns about cyber attacks, the treatment of Muslim minorities, and Beijing's control over Hong Kong. Chinese officials criticized the U.S. over the killing of Black Americans and called the U.S. the champion of cyber attacks. A dozen U.S. states are expanding access to coronavirus vaccinations earlier than planned for every adult. That's accelerating the biggest such campaign in the country's history. It's also making strides towards President Biden's May the 1st deadline for eligibility. The Bank of Japan has carved out more flexibility for its stimulus tools. That follows a review to shore up its policy network for a fight to stoke inflation. The Japanese central bank set out a wider movement range for bond yields, scrapped a buying target for stock funds, and said it would offer lending incentives if it cuts rates. And the global insurer Chubb has made a $23.2 billion offer for its rival Hartford Financial Services. It would represent a 13% premium to Hartford's close on Wednesday, and it would be one of the biggest deals in the insurance industry in years. Chubb says it's gotten no response yet. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Proud to announce that tomorrow, 58 days into our administration, we will have met my goal of administering 100 million shots to our fellow Americans.
In just 6 weeks, he wanted 1 million a day. We've got 2.5 million on average right now. That was the President of the United States from New York City this morning. Good morning. Alongside Tom Keene, I'm Jonathan Ferro. Lisa Abramovich out of the building. She'll be back with us on Monday, I'm happy to say. Here's the price action. Equity futures up 12, call it 13, up 1/3 of 1%. The Nasdaq bouncing back up 77, up 78, call it 0.6%. Here's the story in the bond market. Yields down 2 basis points. Yields down 2 basis points to 168.74. Yields stable on a 10-year Treasury after a really, really whippy couple of days. And talking of whippy, WTI, Tom, WTI. Where were we yesterday? What a move lower on crude. Today, stable, up at 1 percentage point to 60.81.
This folds into EM and demands. We may do EM here in a minute, but, you know, it's interesting to see. You got Turkey and Russia and that raising rates, and you got oil demands, 60.59, a 58 print for a cup of coffee, bouncing up today. West Texas Intermediate, 60.80. Brent goes from 70 back to 64.03. Okay, let's get through it. We got like a 2-hour conversation here with Andrew Pekos of Johns Hopkins University, Bloomberg School of Public Health. Mr. Bloomberg, of course, his philanthropy to his Johns Hopkins University, and of course, principal of this radio and TV platform as well. Dr. Pekos, I want you to translate for me the epidemiologist upset. I'm going to butcher this, John. The ophthalmologist lecturing the epidemiologist on epidemiology. In your world, what's it like when someone else in medicine, science, and care goes after your core competency?
Well, you know, it is a little disappointing. You know, I think, you know, Senator Rand wasn't thinking about all of the science that's on the table right now with respect to the need to do mask wearing, even if you've been infected or vaccinated. You know, the bottom line is this. One, we never rely on just one intervention to keep the virus away. So just because you've been infected or vaccinated, that isn't enough for you to be completely free to do anything that you want.
Yeah.
Two, the number of cases is still way too high, and we could potentially set up a situation where we're exposing people with antibody levels and allowing the virus to try to adapt to this amount of immunity that we're putting in the population in a way that's faster than it should be. Those are the things we have to think about.
Yeah, we got so many things to talk about here, but Andrew, I'm going to go to what John Ferro's thinking, which is, why can't I get vaccinated? How fast are we going to get to people who really want to get vaccinated getting vaccinated?
Well, you know, the supply numbers are really been the limiting factor up until now, and it really does seem like some of the estimates are going really high right now in terms of what can be produced. There's cooperation between pharmaceutical companies to make more vaccine. Production scale-up is increasing at a phenomenal rate. And so we're seeing this transition now to these mass vaccinations in the general population which, if done effectively, can really tremendously increase the number of vaccinations we can do a day. But it's been a supply issue up until now. That seems to not be the issue in the next couple of weeks.
Professor, talk to me about numbers then. 2.5 million on average per day over the last 7 days. Where do you see this topping out? Can we get to 3?
We absolutely can get to 3. Remember, the focus so far has been on those high-risk populations and limiting and trying to limit the severe disease in the elderly, the healthcare workers that are highly exposed. Now we're transitioning to places where people can actually move to centers for mass vaccination more easily, and they can line up for these vaccines in a much more rigorous way and much more timely way. So we can see a massive increase in here. We just need to have the resources in terms of the people that are volunteering to put the vaccine into people's arms, and to make sure the supply chain is complete and continuous, and we don't have these speed bumps and interruptions in the supply distribution.
And to work on acceptance. And I just wonder, in your mind, Professor, how governors can get ahead of that issue. They need to get ahead of that issue. Before the numbers drop away, they need to open up eligibility. We've seen that from Rhode Island. They'll open up eligibility April 19th. Illinois are going to do that, most of Illinois, April 12th. Utah, full eligibility, March 24th. Is this the right approach for governors to try and get ahead of the acceptance issue?
Absolutely. I think you want to have as organized a rollout as possible. We've seen many states that have had problems immunizing just the very vulnerable populations. What you don't want is people to show up for a vaccine and then be sent home because of some technical problem. That's one big problem. The other thing is, we can immunize 5 million a day, but if we only have 2 million people a day who want to take the vaccine, then we've hit an artificial ceiling. And so we have to work on getting the message out. This vaccine is safe. It's efficacious. It's efficacious against even these new variants that are coming around. It needs to be sent out there so we can get public input and buy-in to getting into the vaccine lines.
Andrew Pekos, I want to talk about the vaccine success of digital. Our Therese Raphael has my first read of the weekend, folks. It is absolutely superb. I put it out on Twitter. And the common theme, Doctor, is the successful vaccination processes all happen because of the digitization of documents, paperwork, the system, and all that. We put a man on the moon. Why can't we digitize our medical system nationwide?
So we can do that in some ways, but the biggest problem becomes just the confidentiality issue in terms of much of the personal information in the medical history and not wanting that to be in easily accessible databases. So we can parse out small pieces, so we can keep track of people's vaccination records, but we can't link that to a lot of their other data or information. And so that's the biggest issue. I think many countries have done this efficiently. The European Union right now is thinking about putting in place a vaccine passport system, which is based on digital information on vaccination history. So there are ways to do this, but we have to be very safe in terms of protecting the personal information of the individuals as we move to these kind of electronic databases.
Andy, you're such a valuable resource for us. Thanks for your time this morning. We really appreciate it. Let's catch up soon. Andrew Peskos there, the Johns Hopkins University Bloomberg School of Public Health professor and virologist. Tom, right now in Europe, huge conversation about how welcoming they will be of British tourists this summer, because British tourism, there's a lot of demand for it in the UK right now, and British tourists will be vaccinated in a way that many Europeans will not be.
Yeah, but John, my amateur take is it's not about the summer. Europe's got to get to April 15th. I mean, it's moving that quickly.
Totally agree, Tom.
In Europe,
got a third wave.
They've got to figure out some really difficult cases increasing dynamics.
We've got to hope Europe's open. Here in the United States, a real conversation about really pushing forward with widening eligibility now, Tom, before we start stalling down.
International travel. I'll go back to the consultant that we have, John Farrow, who said, what are we doing about Heathrow to JFK as a start?
CNBC reporting maybe back end of May, Tom. Maybe we start opening things up just a little bit on the international front. From New York City this morning, good morning. Equity futures up 13 on the S&P 500. Yields lower by a couple of basis points. This is Bloomberg Surveillance.
will start soon delivering also COVID-19 vaccines once all permissions have been granted. We are in discussion with Ministry of Health, with current logistic partners in different countries. So we're looking at Southeast Asia right now on delivering COVID-19 vaccines. We are also setting up already on the African continent in already one country and looking at the second country to expand.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Savings rate, I expect to stabilize at a much higher rate than it was before the pandemic.
While traffic may continue to be weak, sales are improving.
We're going to continue to get some good data, but at some point in the second quarter, I think we hit that peak.
Where there is danger is in some of these markets that have been swept up into a speculative frenzy.
We're early in the economic expansion.